In September 2025, the mayor of Las Vegas publicly begged Canadian tourists to return, declaring, "Please come. We love you, we need you, and we miss you." For a city that once relied on Canada as its top international market, this was more than a marketing stunt. It was economic triage after visitor numbers collapsed by nearly 12% in a single summer. If Las Vegas is on the brink, what forced the world's entertainment capital to sound the alarm? And what happens if tourists stay away? Canada holds a singular place in the Las Vegas tourism economy. Throughout 2024 and into 2025, no other international market sent more visitors to the city. According to the Las Vegas Convention and Visitors Authority, Canadians consistently accounted for nearly a third of all overseas arrivals, outpacing Mexico, the United Kingdom, and every other country by a wide margin. This dominance is not just about headcount. Canadian travelers are known for staying longer and spending more per trip than most other international guests. Their presence fills hotel rooms during off-peak periods, sustains midweek show attendance, and drives business for restaurants, retailers, and convention venues. Local officials and tourism analysts point to this structural importance when explaining the urgency behind Mayor Berkeley's direct appeal. Clark County representatives armed with LVCVA dashboards describe Canada as the city's #1 international feeder market, an anchor for the entire non-U.S. segment. In peak years, Canadian visits routinely topped 900,000, with some estimates placing their share at nearly 30% of all international arrivals. Even as global travel patterns shifted, that ranking remained unchanged through early 2025. The economic exposure runs deep. Canadian visitors generate a disproportionate share of room nights, support major conventions, and help stabilize hotel and entertainment revenues. Their absence is felt across the Strip and beyond, amplifying the impact of any broader tourism downturn. For Las Vegas, this is not a theoretical risk. City leadership has been clear. When Canada's travel faucet slows, the entire international pipeline weakens. That reality shaped the mayor's public plea and set the stage for the urgent questions now facing the city. Economic analysts describe the mayor's appeal as a clear sign of fiscal distress, not a routine marketing push. When the city's top official goes public with a plea for Canadian tourists, it is a direct acknowledgement of deep structural dependence. Las Vegas's financial model relies on a steady flow of international visitors to fill rooms, drive gaming, and sustain the broader hospitality sector. When that pipeline slows, the gap is not measured only in empty hotel beds. It ripples through show bookings, restaurant covers, retail receipts, and ultimately, city tax collections. The phrase "we need you" is shorthand for a looming budgetary shortfall. Without international inflows, especially from Canada, the city faces mounting pressure on room tax revenues, which fund everything from police to parks. Economic memos circulated among city staff in September 2025 warned that a prolonged slump could force cuts to municipal services and delay planned projects. Industry experts say the urgency in the mayor's words reflects a form of economic triage, a public SOS intended to alert both policymakers and the market to the seriousness of the downturn. The message is clear. Las Vegas cannot replace lost international volume with domestic visitors or higher spend per guest alone. The revenue gap is too large and the city's business model too exposed for optimism to fill the void. As the numbers come in, the tone of official statements has shifted from hopeful reassurance to blunt warning. The plea is not just about sentiment, it is about survival in a system built on relentless inflow. Las Vegas's summer 2025 visitor numbers tell a story of deepening decline. In June, the city welcomed just over 3 million guests, a drop of 11.3% compared to the same month the year before. July continued the downward trend, with total visitation hovering around 3.1 million, down 12% year over year and representing the sixth consecutive monthly fall. September brought little relief. The Las Vegas Convention and Visitors Authority Executive Summary pegged visitor volume at roughly 3 million, about 8.8% below September 2024 levels. Each month's shortfall translated to hundreds of thousands fewer arrivals than the city's hotels, restaurants, and entertainment venues had budgeted for. These figures, confirmed by sources such as the Los Angeles Times, New York Post, and Tourism Analytics, provide a clear empirical baseline for the city's struggles. The magnitude of these losses is not just statistical. It is visible in emptier casinos, shorter lines, and quieter sidewalks across the Strip. For Las Vegas, these numbers are more than a temporary dip. They represent a sustained contraction in the city's economic lifeblood. Casino executives watched as a 3-year streak of record gaming revenue came to an end in fiscal 2025. The numbers told a complicated story. Even as visitor counts dropped, some months still posted strong gaming returns, hinting at higher spend from a shrinking pool of guests. But that surface resilience masked deeper problems. By mid-year, hotel operators faced falling occupancy rates, with average daily rates and revenue per available room both sliding compared to 2024. September occupancy settled below 79%, down several points year over year, while RevPAR, a key profitability metric, fell nearly 9%. Airline planners responded to weak demand by cutting capacity on major international routes, with Canadian carriers slashing Vegas-bound seats by nearly 20% over the summer. Fewer flights meant higher fares and even fewer visitors, compounding the stress on hotels and casinos. The interplay between these sectors, gaming, lodging, and air travel, revealed a system under pressure where surface-level gains could not offset the broader decline in volume. For operators, the signals were clear. The foundation of Las Vegas's tourism economy was eroding in real time. Canadian travel agencies spent the summer of 2025 fielding a new pattern of requests. Instead of booking Las Vegas getaways, more clients asked about Cancun, Dubai, and other international hotspots. A Plea's August dispatch captured the trend. As Las Vegas costs climbed and travel friction grew, Canadians looked for better value elsewhere. Agents confirmed a tangible shift. Packages to Cancun surged, buoyed by all-inclusive deals and stable airfares. Dubai, too, gained ground among travelers seeking urban luxury, without the added visa headaches or sharp exchange rate penalties facing U.S. destinations. While official booking data remains limited, industry sources and travel agency interviews consistently referenced a rerouting of demand. Canadian bookings to Las Vegas dropped by nearly 1/3, while competitor destinations reported increased interest and steady arrivals. Analysts described it as a global substitution effect. Travelers, discouraged by price and policy, simply redirected their dollars to places that felt more accessible and affordable. The leak in Las Vegas's international pipeline was not just about fewer visitors. It was about the city losing ground to rivals ready to welcome the same guests. Inside Las Vegas, the effects of the tourism downturn are unequal. On the Strip, some luxury resorts continue to draw crowds for headline residencies and high-profile events, but even these properties report softer midweek numbers and thinner casino floors compared to last year. Downtown, KTNV coverage highlights a different story. Smaller hotels and independent restaurants face quieter nights and empty tables, especially during periods that once relied on international guests. Off-strip businesses, particularly those catering to value-conscious travelers, have been forced to pivot. Some now offer steep discounts or run locals nights just to keep doors open. Owners describe a daily scramble to adapt, with staff hours cut and marketing budgets stretched thin, while a handful of venues benefit from targeted promotions or a loyal local following. Many others struggle to fill seats, underscoring how the city's fortunes can diverge block by block. For frontline workers and small business owners, the numbers are not abstract. They shape paychecks, schedules, and the ability to stay afloat. Growing concern. City finance officials are watching the numbers with growing concern. Room tax receipts have already fallen short by $42 million year-to-date, raising the specter of hiring freezes and deferred capital projects if the slide continues. Hospitality unions, led by culinary workers, Local 226, report a 9% year-over-year drop in average weekly hours worked across member hotels since July. If hotel occupancy remains below 85%, union leaders warn that mass furloughs and layoffs could be triggered in the coming months. Gaming revenue forecasts for fiscal 2025 now anticipate a 2.5% to 3.5% decline, ending a historic run of record years. Risk ladder. First, hotel revenue shortfalls. Next, cuts to shows and conventions. Then reductions in hospitality jobs, and finally pressure on public services and city budgets. Heading into the fourth quarter, every monthly data release, room tax receipts, union hours, airport throughput becomes a critical indicator for Las Vegas's economic future. In September 2025, Las Vegas reported a visitor count of roughly 3 million, down 8.8% from the previous year, according to official Las Vegas Convention and Visitors Authority executive summaries. Mayor Shelley Berkeley's direct appeal to Canadian tourists, amplified across major outlets, marked a rare moment in the city's history. A public acknowledgement that international inflows, especially from Canada, had shifted from a faucet to a drip. Despite some months of strong casino revenue, the sustained decrease in arrivals, reduced hotel occupancy, and airline route cuts revealed deep vulnerabilities in the tourism-driven economy. The exact impact of competing destinations like Cancun and Dubai on Vegas's losses remains difficult to quantify, and it is still unclear how quickly policy or market changes could restore previous visitor levels. What is certain is the risk ladder now facing Las Vegas, from lost hotel revenues to municipal budget pressures. As the city waits for a fourth quarter rebound, the mayor's words stand as a factual SOS. Evidence that Vegas's recovery depends not just on its allure, but on the return of its most crucial visitors.